And good morning, options traders. Well, I thought it would be helpful for everyone in the group to talk about the one trade you should not make. And I thought it was important because still in these fairly volatile markets that we have, I hear a lot of traders having this particular combination of views and wanting to place trades. And it's just simply a mistake for traders. So first of all, understand that we have different views in the markets. Typically, you can be bullish, bearish, or neutral across different variables. For most traders, it's going to be between price and or volatility. So if you think about it, if you can be bullish, bearish, or neutral, that's three choices on price, and you could be bullish, bearish, or neutral on volatility, that's another three choices. There's really 9 basic strategies you could have between price and volatility views. It's important to understand as traders that whenever we say that you are neutral, that it means no opinion. So for instance, price neutral means that you have no opinion on price. You're saying it might be bullish, it might be bearish. That's not saying that you believe the price will sit absolutely dead still. And yet that's how a lot of traders interpret that. So for instance, let's take a look at a long straddle. This is a strategy where in this case, we've purchased the $100 call and the $100 put. Notice we get our bend right here at the 100 strikes. And this is what we would look like at expiration. But today, we might look like this black dotted line. And as time passes, that black dotted line is going to slowly start moving towards the expiration curve in red. But notice with this strategy, you are price neutral. We're going to want to put the stock price, at least for starters, right here at those strikes. And the reason is that we're admitting it might be bullish, it might be bearish, but that's price neutral. And that's why I want to start right here in the center in a delta neutral position. But notice that doesn't mean that I have no price exposure. It means I have no price exposure right now. So what's the other side of the viewpoint that we should have for a long straddle? Well, we need to be volatility bullish. And that's because if you are long a straddle, you are positive vega. That's your exposure to volatility. This is also a little bit of a gamma play. That's why we have so much curvature on that black dotted line. We are looking to generate deltas. If the stock goes up, we're looking to generate negative deltas if it goes down. But again, we're price neutral. We don't really have an opinion on price. But you see, in this case, we are price neutral, but volatility bullish. But there's one combination between this bullish, bearish, and neutral, and between price and volatility that you just simply shouldn't trade. And that is if you are price neutral and you are volatility neutral. And this is what I'm seeing a lot of traders doing now, where they'll say, well, the stock's been going sideways, so I'm price neutral, and I think volatility is going to just sit sideways. And that's something that you just shouldn't trade. So in these cases, they might say, let me do a short straddle. And in their mind, based on the shape of the profit and loss diagram, they will make money if the stock price sits in a fairly narrow range. And that's why in their mind that they are price neutral. And then they'll also say, because I'm not looking for a large price move up or down, I must be volatility neutral. And that is absolutely not true. If you are short a straddle, or a strangle for that matter, you have negative vega. You're just on the opposite side of the trade from the person who took the long straddle or strangle. So you really should be price neutral, but volatility bearish. That would be a reason for doing a short straddle or a short strangle. But not because you're price neutral and volatility neutral. And again, this is a combination that I hear a lot of traders talking about these days and thinking that therefore they want to place some type of a trade. Could even be butterflies, condors, short straddles, short strangles, and things like that. But if you think about it, if you are truly price neutral, you don't have an opinion on direction, and you're volatility neutral, it makes no sense to put on a trade that exposes you to price movements and volatility movements, because there you're just taking risk for which you're not being compensated. So I like to point this out because not only does it show that strategies can be tricky, that you have to understand exactly all of the characteristics that you're actually playing. But it also shows that there's one combination in particular that you should just simply avoid. If you'd like to learn more about the art and science of options trading, please check out the Alpha Trader course and strategy lab at optionsatoz.com. Also, please join us on the Facebook trading group Options A to Z, and you can find a link in the description below.